Hey, what's going on, everybody? My name is Matt, and welcome back to Crypto Kings. And today's video, we're going to be talking exactly what SHIB is doing because I'm seeing a very interesting pattern detected that I think you guys are going to want to look at. So if you guys are new, make sure to drop a like and subscribe for more daily SHIB vids, and let's get right into it, folks. So if you guys have not already seen what SHIB is up to here on the day, we are rocking a basically neutral approach to the price right now, only down a little under 1%. Market cap here is still around $32 billion, which is literally ridiculous compared to where we were a couple of months ago. I think so many people are forgetting that. And again, guys, this is truly amazing growth. Let's be honest. It is truly amazing growth over the past few months. And again, everything has pulled back. It's natural. And what I'm going to show you guys in the rest of this video is going to be pretty hopeful, I believe. When it comes to volume, guys, we are down a good deal, but the majority of the volume has been what you could say equal. So we're down in sell volume and down in buy volume. So nothing overly tragic, just not making the rounds on the news today or whatnot. So definitely nothing particularly tragic there in terms of volume. Now, when we take a look at the chart and see what we're working with here, guys, honestly, this is very exciting to me because what I talked about in the last video is I said, hey, this looks very much like a cup and a handle pattern. This is exactly what we would expect. Again, you guys have the cup here, the rounding of the bottom, then we have the handle, and then a bullish movement. That is ideally what you would see in a cup and handle pattern like this. Now, what we're working with now is sort of the rejection of the ability for this handle here to create a very, high breakout explosion. We're rejecting that ability, unfortunately, here, obviously being stopped right around the low 60s, two instances here being stopped right around the low 60s. So what we're working with is something a little bit different, but regardless, still bullish. So I noticed that, hey, wait a minute, this looks a little bit like a flagpole. Well, yes, it does. And of course, when you have a flagpole like that, you could actually have a flag. And in that instance, you would have a very bullish movement. And that, of course, can be documented. You guys can see what a bull flag here actually looks like. And again, it's just sort of a diagonal pole with some V's next to it and then a breakout. Now, a bear flag, of course, would be if it was coming down from the top and making triangles. So is it making triangles or is it making a V? Well, when we look at this, it's definitely coming from the bottom, so that's a good sign. And it looks to be making V's. It looks to be making multiple V's. So again, this to me looks extremely, extremely bullish. And again, I can't swear by this. It is very possible there could be some kind of rejection of this. And of course, I'm not a financial advisor, but in my personal opinion, I would give this a definitely good 65-70% chance, in my opinion, that this is some bullish behavior here. Definitely more than likely, in my view, that this is not a bearish trend, and that is always good. Speaking of things that are always good, guys, checking out Webull, the top link in the description, is always good. You guys get started over there and get 2 free stocks valued up to $2,300. Of course, it is my affiliate link, so if you guys use that link, I get a couple free stocks as well, and I always do appreciate it. You guys get started trading stocks, crypto, including SHIB, all that good stuff over on Webull. Top of the link down below in the description. When it comes down to it, guys, again, what I think we are working with here is the opportunity to have a very bullish flag pattern here leading to a breakout. It is possible that this could be wrong, but, I definitely have seen what looks to be a very long period of consolidation here in a sense without actually crashing to a point where everybody gets that scared. Again, the only real crash on that level was around here, headed down to the low 40s. That was not particularly good, but we did rebound very, very quickly. And again, when you scrunch everything together, it kind of gives you a new light on things. Of course, I can't really sit here and argue that this whole period here is a consolidation because that would be incorrect. I can't argue this, but what I can say is it really doesn't look that bad when it comes down to it. And when it comes down to where we were, think about this, guys, price-wise. Look at where we were in comparison. When you zoom out, it definitely does give you some new perspective. Again, it's not a definite answer when you zoom out, but it gives you a little bit of a new light on what we are working with and makes these dips seem a little bit less significant in the long run. So that's definitely something good. I find that is emotionally healthy to do sometimes when looking at something like this. When we want to take a look at the relative strength index, you guys can see here over on the screen, we're right around 50, right around the middle. So again, nothing particularly volatile going on. It would be expected, in my opinion, that wherever we are, again, if this flag pattern continues, and of course, we would see it continuing, to sort of make these kind of V shapes, which you guys can see here. We would continue to make these kind of V shapes here for a little while. I could expect something like this. If that is not the case, though, if it decides to forfeit this kind of flag pattern, it is very possible we could just kind of consolidate between, say, 60, 61-ish, and maybe 55, 56-ish, and just kind of bounce around here for a good while. I do think this is very possible. Judging by what the relative strength index is saying, it doesn't look as if we are experiencing anything overly volatile. Again, the volume here is pretty low on the day, so there is no dramatic fluctuations in volume or whatnot. Definitely nothing like that that could trigger some kind of, extreme flash crash or whatnot. I definitely don't see that happening here on the day. When we are to check the Fibonacci retracement, which I always do like to do, you guys can see on screen here, we are going to expand it and see the high and the low of the most recent runs. We've got the high here at around 65 and the low here right around 55. So it is taking those things into account, and it looks really, what I could tell here again, that the 23.6% line is going to be one of the main players in this instance, because this is really where, again, from this bounce off here at 54-ish, this is going to be a big player in terms of keeping these flags going, because again, the goal here for a flag pattern like this is to create V shapes like this. So again, if we're going to have a V shape like this, it's going to have to do some bouncing. It's going to have to bounce off some of these key support lines. And of course, the Fibonacci retracement always does provide us with some of these important support lines. So the 23.6% line definitely does look vital in this instance. It seems as if the 50% line was acting as a line of resistance in a few instances. So that definitely could be worth noting. But it is possible, again, if we are to be a little bit tighter here, that, we could create some of these V's here in between the 23.6% line and the 38.2% line. So it is very possible that the 38% line here could serve as a future resistance as well. And remember, these lines are always subject to change. The support resistance does change on the day. You can't really make a long-standing permanent one without the historical data to do so. You know what I mean? It's very tough to not change these on the day, because unless you have a historical instance for that, like again in the past here, we had the 60 line as a line of support, through late October, early November, because there were 1, 2, 3, 4 instances of it getting close to touching 60 and instantly snapping back. So in this instance, we have historical context for not falling below that line. And a lot of people on Twitter were asking me, guys, oh, Matt, how do I read a chart? What do I do? How does it go about reading a chart? Really, guys, the best thing I can tell you is try to think about human psychology. Try to think, what are people doing at this bottom? What is the thought process? Why did it snap back? If you ask yourself those questions, I find the more I do that, the generally better off you can be. And of course, the relative strength index is a great indicator to look at. The Fibonacci retracement is a great one to look at. I also like to take a look at, a lot of other ones, but definitely the MACD as well is a very good one. And you guys can see we're getting a bit of a soft sell right now. It very well, could change here in the near future, but we are getting a soft sell signal, which is definitely fine. I wouldn't, worry too much about that, because that always can change in an instance. But ideally, guys, if you're trying to look and figure out, why did this price recover? Why did this price crash? Trying to figure out the way rounding works, the bottom, the top, why is rounding a bad thing in this instance? Why is it good here? Asking yourself those questions, I think, definitely does help when reading a chart, especially with something like this. So with that being said, guys, thank you all so much for watching. Make sure to drop a like and subscribe for more daily SHIB vids if you guys enjoyed. Thank you guys so much for watching. It was Matt. See you guys on the next one. Peace.